have like joined the markets after COVID time. So definitely they are experiencing a little difference in the market conditions, the kind of correction or the kind of correction happening, especially in the small and mid caps. Only select picks are doing good. Rest of the bucket in the small and mid caps has been correcting quite a while, and so we can experience that even for a longer time. Even in March last year, also we experienced correction, but again, that was not of that sort as we have been experiencing this time. But again, these are the times wherein, if we have studied well, so definitely we can be able to find out what good picks we can think of from a longer point of view. But again, especially for traders, this market is difficult, and the kind of return expectations which were set in the past has been brutally hit by this recent correction, although we cannot term it broadly as a recent, because at index level, if we specifically talk about Nifty, we haven't corrected more than 10%, if I'm not mistaken. So, but yes, and the kind of profit booking, or to say the volatility which we are seeing in small cap and mid cap is worrisome. And basis chart, even day before yesterday, also we discussed the Philip Capital report, on the basis of which we shared certain data points which made them believe that there could be more pain in the market from here as well. So, of course, in these times, we should be very cautious with our incremental investments. Having said that, it means you, I mean, basis last 3 4 years, we fairly assume that we normally see V-shape recovery. We had seen V-shape. Sorry, guys. Yeah, the kind of V-shape recovery we were expecting or maybe experiencing from last 2 years has not happened yet, and there are high chances that we may see some sort of consolidation as far as price and maybe time correction. So those kind of things can happen, and especially the chart levels. I'm not in front of. I mean, do not have a chart in my screen, so right now cannot tell you the exact levels. But again, there could be more possible decline in the small and mid caps. And even if the index corrects say 2 to 5%, the individual companies correct even more than that. So we need to be very cautious. While every dip is not a buy for sure, so you need to be very selective about the names which you are thinking of adding. And if you have if obviously in these times you get good bargains which previously appeared to be high on valuation, so slowly and gradually they are coming back to sanity. And even if you see the new IPOs, they are listing below their prior to, this correction. You were seeing that the kind of euphoria in the IPO names were like they were opening some 50 60 or maybe doubler tripler on the day of listing. So that kind of thing is settling down. But again, there are a number of things, and even the recent Fed event, so we are likely to get what would be the, and the likelihood is that they will retain the rates as it is. But again, the commentary needs to be seen, and tomorrow we may experience its uh, consequences on the market, be it positive, negative, or neutral, whatever it be. So later today we'll get to know that. But again, those who are into doing mutual fund SIPs or some sort of set processes in place wherein they are adding to their uh, long term bets, so I do not see there is anything to give a second thought if your horizon is 3 to 5 years or maybe longer than that. And uh, obviously, the kind of hope investing or say the order book investing, which has yield good returns in the past, may not repeat anytime soon in this financial year. So we need to be cognizant of that, and we certainly need to look out for pockets where have growth visibility, and in the coming quarters as well you'll see that the growth is there and visible in the numbers. And if there is any doubt on your investment, then definitely either you cut your losses or you can simply retain if you have a visibility that your price will come or maybe it will appreciate going forward. So I mean, so any questions? The comments has only one question: where do you see a bottom in mid and small caps? So obviously I'm not chartist and do not believe in timing the market, so I cannot say where the bottom would form. But again, there is a possibility that we may see some correction from here also, so you can fairly assume that. But your decision should not be like I mean, if your picks or maybe the investment which you had made, the horizon is I mean, if you had taken that as a trade and forced into being a long term investor, then it is altogether different thing. But otherwise I do not see there is any reason for you to panic or look out for any borrowed conviction. Or I mean, every day you're getting new news feed, obviously in such scenarios there are high chances that you will be confused that what you should do. You should be selling and sitting on cash, or whether you should be adding to the names which you already have, or you should look for new names wherein you think that the current valuations are better after this correction. So your decision point should be obviously there are many factors which influence even the friends discuss the ideas or maybe the social media and the sectors. So Yogesh, without taking much of time, so I would request what's your broad outlook on the market and basis relative strength. So where you see we still have strength, and there is some noise in the background, Yogesh. I mean,
Yeah, just just.
and like which
Yeah.
sectors or which relative strength is weak, and some sectors where you think that the strength is coming slowly and gradually. And there is a lot
Hmm.
of uncertainty to the mind of our audience. So, any
Hmm.
opening remarks, come thoughts around that, then we go on to the discussion. And
So, hello, friends. That's a nice topic today. That since everybody is scared about the fall that we are seeing right now, so basically, this fall, what we see is not a fundamental fall, nor it is a major selling fall or something like that. It triggered when SEBI informed the mutual funds that not to, push in the money too much into small and mid cap. So what had the small and mid cap had to do was stop investing blindly in those two segments and had to shift their portfolio to the major large cap. So what happened? It just triggered the panic into the market, and we are running into a big major center election that is going to come very shortly. So what happened? The big guns got the opportunity to exit some of the portfolio. If we notice, a lot of companies in the short term, mid cap and small cap had gone very highly overvalued. So what happens in highly overvalued when people do a lot of SIP? Investment opportunities in the companies are very rare. Like good companies are very little, and random companies are a lot, which plays with their valuation game with the balance sheet and all. So lot of SIP keeps coming into same segment, that is small and mid cap, what happens, the mutual fund has very minimum amount, minimum companies to keep investing. So more and more people keep investing, and they keep on circulating their stock in their money into the same stock, which may get little bit risky. So SEBI took a right step at the right time, because if this could have gone crazy, then neither mutual fund would have been able to exit, nor the retailers would have been able to exit. Because what happens, a large cap company can come out with 2 or 3 quarters negative returns, and then they can come back, bounce back with the sectorial changes, and they can revive their company. But say small or mid cap company do not have the power of money that much. So even a small changes in the geographical demand and supply can can hamper them with very badly inversely in their earnings. Then if the fall may come, then it would have been very difficult for all the traders and the big mutual funds to exit. So somewhere down the line, it was good also, and as per the investment point of view. But for the retailers, it was a very bad decision, because it came overnight, which I felt which was not required to come up with just a statement. There could be a better professional way to come up, and they could have given a chance for the retailers to exit. That is my overall scenario. Currently, what we are seeing today, that it took a support of 21,800 Nifty, and on the daily basis, it just gave a small doji kind of a bar, which is still not bad. A lot of buying happened in small and mid cap companies even in today's market. What I would say, that if you have invested in a good fundamental stock, let it be any segment, let it be IT sector, or let it be mid cap or small cap. If you've invested in a good fundamental stock, this fall is not a problem. Because what happens, I will just give you an example. I had invested in a company named Pakka. It's a small cap company, and it's a good fundamental company, and it has a lot of orders, good revolutionary paper packaging industry it is into. The investors are very, I mean, the promoters are very aggressive in what they are doing. But what happened in this fall, even it got hampered from 400 rupees to 240 rupees. So if I see from the top, it nearly fell around 38% down from the top. But today, within one day, it went up 14% up. Okay. So, what happens in such a scenario if the companies are good? When the Nifty takes a particular support, I'm not trying to say that I can identify the bottoms, and I would have bought at the bottom of 240 rupees or something like that. No, I am not a god. I cannot identify exact bottom prices that it can reverse. But I'm trying to tell you is that this kind of such good companies do not take time to go back to your purchasing price and start giving you good returns, even if Nifty recovers half of what they have fallen. Okay, recently from the top, this fall, the Nifty has fallen around 4.50% or something like that. So even if Nifty covers 50% of that fall, there are bright chances of such good companies to just take 2 or 3 sessions to just come up to your cost to cost. And if markets sustain, and by the time new quarter and quarter result comes up or something, management comes up with a great news or something, then the stock can literally fly from there. So just because it is falling, you don't need to panic. First thing. Second thing, no matter, avoid taking tips from those kind of Instagram videos that people are coming, because I feel such kind of videos comes only when the market is bullish and has a zero value. So avoid such kind of tips and free people, rather than you analyzing stocks, you are analyzing people who is giving the stock. So avoid such kind of thing. You need to have your own study at any given point of time. The other question I would like to answer, that which sector do you feel it's going good? So basically today I identified a sector which is Just a second, I would just give you the name. It was a capital good electric equipments. Okay, so the companies like WEL, CG Power, those all were giving good, showing some good strength. Celsar Electronics, KPIL, ABB, Power India. Those were the companies which were showing good strength. The other sector which I'm very excited about is auto sector, which Maruti today crossing 12,000 rupees. Mahindra and Mahindra already is into bullish. Eicher Motor was showing some strength. Maruti is Tata Motors is bit little bit shaky because of its demerger story, and they will come up with a documentation that how are they going to demerge the entire company between the heavy vehicle and the no retail car company, and what valuation they will give to each other. So then it will take a curve according to that, I feel. So we have to wait for Tata Motors. But yes, this two sectors, what I feel is capital goods, electronic equipments, which I shared some stocks. They are not tips, but just observation, where Celsar Electronics today was at the upper circuit of 10%. ABB is already at a good strength, and WEL was showing good strength. Power India is showing good strength. CG Power is a good company, according to me. That's go showing some strength for us. So these are the two sectors which I am aiming for. If market takes support and gives little bit 50% also recovery of the entire fall, that is around 2.25% or something, I feel these two sectors can give good noise and can be good opportunity. You can find good opportunities to invest. So
So
that's
that's
So you
my
my
yeah.
answer to the
answer to
query
the
that.
query that.
Right, right. So you can say this market is, I mean, at least for the traders or swing traders, it has not stabilized yet, right? So, and the certainly the point you raise, the uncertainty amongst the retail is the biggest thing. They are clueless, the better, I mean, about their existing investment. They are of the opinion, confused in the sense whether to remain invested or to sell them or to add to them, or what shall they do. So there is a lot of confusion. So basis your chart reading, which current I mean which levels you see on the small and mid cap index, if you can check, which are crucial basis which we can decide whether the trend has further weakened or there is a change in the trend, and things might stabilize going forward.
Correct. So if I'm seeing CNX mid cap, the current level of 45,920 is the exact support which we have to see. If any further selling off in this level, we can see mid cap going towards 43,230. So there is a big still possibility of a mid cap to fall approximate around 5 to 6%. And if I see CNX small cap 100 index, uh, it is at a very good levels. I feel that 14,087 right now. It is 14,560. So even 500 points from here, I feel little bit rare to go and break it. So rather than mid cap, I feel there is a good strength in small cap as of now. I am not saying that you should go and invest in small cap, but I feel that if Nifty recovers from here a little bit also, small cap index will be the first one to give you signs of upper side, then the mid cap. So watch out for small cap index stocks if you all want to see. And the other thing is, I'm also again saying that no matter which segment it is, if your stock is a fundamental stock, it is in a right segment sector, such fall you may not get or collect the courage to invest right now just because it is available at a cheaper price. But there is no need to panic and sell. There will be a lot of other theories that if hits the stop loss, exit and all. I totally agree. But if you have faith in your uh, the segment that you have invested, like I have very much good faith in auto sector, I have faith in defense sector, I have faith in railway sector, I still have faith in PSU bank sectors. uh, what will happen is that such kind of falls up and down will keep coming. There is no doubt. This fall was a major fall after COVID. It's still just 4.45%. It's not a very big fall that people were assuming. The point is only because the big guns came and started selling left and right, just because SEBI had given them the order to shift to a larger cap and all. But I feel still that small cap should not fall below 14,000 level. It should find support somewhere here, and don't get panic, guys. Just see whether your stocks are fundamental or not, and it's very simple. I'll just share what to do is just see your profit and loss account that is in your companies, whether it's a yearly profit and loss account sheet, and just see whether the company is making consistent good profit or not. If the stocks is dicey and giving you vague numbers and all, avoid it. Then I'm just saying, on a broader scale, do not invest any stock which is more than PE 40 as on today, because if you are giving in a downfall, any stock which is above 40 PE, you are paying very high multiple for their earnings. You can pay higher multiples on their earning when the market is bullish, but not in such kind of sentiments where people are looking for a recovery and exit from the stock if they have. So if you really want to invest even in this level, try to avoid give more than 40 PE to any of your stock. So on that point for your query.
So Yogesh, like strong sectors, I mean, wherein you are seeing some strength, you already discussed. So any sectors wherein you see like they did good in the past and currently they are experiencing great weakness, and for now in the avoid list, at least from the trading point of view, if not from long term.
Why do you want to? I'm sorry, I'm just wanted to clarify the
Clarify the
question.
question.
You want
You
us
want
to
us to
you
you
avoid a
avoid
sector,
a
right?
sector, right? Yes, yes, which are weak sectors, not to avoid, but broadly like not tradable at this point in time, owing to the weakness of
Yes,
relative
correct.
strength.
So I feel IT sector right now is very overvalued, and the other sector is media sector. Guys, avoid media sector at any given point of time, because it has not been performing at all from a very longer period of time, and I don't think so that it will also right now perform, because somehow it is not gaining strength from very long time. Even at the bullish market it was not gaining. Even in bearish market right now, where if it's not a bearish market but the sentiments are a little bit weak, even in such kind of market, media sector is not doing that great. So somehow I feel that the media sector is controlled by a lot of politics and all, lot of games that are going on, and a lot of news in Z Limited, and their merger stories are coming, their joint venture stories are coming, and then suddenly they are coming out of it. Avoid such kind of tips and all, and avoid such kind of like Viacom 18 has been taken over by Reliance, and you're just going and blindly investing. As on today, I would say two sectors that you should avoid is IT sector, and the other is media sector.
Right. So basically, for clarity of our audience, like we are taking a short term view, not saying from long term point of view. And apart from that, Yogesh, like auto and capital goods is one. So apart from that, I mean, obviously, select companies we always get across sectors. So do you have any sense like on the renewables, power and energy sector, the companies which cater to these sectors? Do you see weakness in those names, or how exactly like you're seeing the space?
See, in the power sector, which I was very much excited about, which I feel as on today, Tata Power is the only company which I feel has the to take the entire power sector up first. Uh, I see a lot of potentiality at this rate also at 379 rupees of Tata Power. This has the company has a great potential, and uh, it is available at 30p. What I see is, and slowly I feel the income will kick in, as in, because power is the main source of energy that we require, and it has to keep growing because India has to grow. So power will be the most important thing, and out of entire power sector, I feel the safest bet and the logical bet is Tata Power, because power sector is very complicated sector to understand. So if you ask me a specific stock about a specific sector, I feel Tata Power is very good. Renewable energy, what I see is that it is still a new concept for the country. Not it is not implemented across the country very well yet, because bits and pieces and lot of small companies across the country are, you know, trying to implement it because there is a taxation benefit and all, but it has not come out very strongly yet. Of course, renewable energy is most important thing. It will take over and will be one of the most important part of our energy supply across the sectors and the growth. But I feel it will still take time. You will need to still give a lot of importance, lot of importance to the segment that it is showing you renewable. I feel water renewal and computer parts, that is electronic renewable, two segments that is in the renewable, two segments, it is going to be a very big game changer. So you can give importance to the e-waste recycling, and the other is water management recycling. That can be very big game change, because water is required in lot of industries. It is the main source, even in the back end or whatever it is. But wastewater management renewable is going to be the biggest game changer in the future. So you keep an eye on that.
Right, Yogesh. So, Yogesh, any view on the cement and sugar sector? Do you see like cement sector has strength and obviously owing to regulation and certain things, and election is also around the corner, so sugar sector appears to be weak. So, any sense on the names if you have checked charts? Not particular names, but sector as a whole.
See, cement sector as an whole, if I see, just let me, just a second. So, yeah, my index. Just give me a second, guys. Uh, yeah, cement sector. So if I see cement sector as an whole right now, it is underperforming. The relative strength of the cement sector is totally below zero on the daily time frame. If I see on the weekly, yes, it is showing weakness, and on the monthly chart, yes, it is showing a weakness. So currently, I see if my entire sector is showing me weakness and the relative strength is showing below zero, then I would definitely not even like to go to individual stock, and try to catch anything which is coming out as a bottom fishing. Because what will happen that even if I find one small stock out of it, due to the pressure in the sector, what will happen, the stock which is rising, and due to the sector has a pressure, the entire stock will fall. So I would suggest that it's better to avoid such kind of sectors which are showing you weakness as on today. So I would say stay away from it as on today. Do not go for cement sector. And sugar sector, it is lot of ethanol stories which are coming, but the government is saying something else and then they are doing something else. Suddenly they wanted to shift to the molasses, and they wanted to stop, the manufacturing of ethanol from the sugar segment. And because of that pressure, even sugar sector is not able to come up as a flying colors, which was showing a great strength in 1 year ago. So even government has to come up with a perfect policy. But I will just see the sugar sector chart for you all, guys. 1 second. Yeah, yeah. As it shows that even sugar sector has been hammered totally left and right. There is only one stock in sugar sector, that is DCM Shriram. It is a little bit interesting to me because they had acquired a company which is into drones. So a lot of it's a very small part of it, but I feel that out of all the sugar sector stock, this can be one of the dark horse if sugar sector try to revive from here. But as on today, for your query on cement and on sugar sector, I would say stay away. We
We So, Yogesh, think the PSU banks and the private banks, What the relative strength is showing you on the chart?
So if I see CNX, let us see first the entire banking sector, what it says. What is Bank Nifty trying to say to us? So Bank Nifty is still trying to show us some strength. It is stuck between the very marginal range from the top till here, that is 46,310. And if I see uh, PSU, CNX PSU Bank Index. So CNX PSU Bank Index is still in the strength. So I would say there is a lot of opportunity right now in PSU banks. It is totally into strength. This fall is a good opportunity for people to accumulate good stocks with good fundamentals. So I should feel that if CNX PSU Bank, which is at the support of 6,517, and current one is 6,680, the max which it can fall from here in the PSU segment is 6,460. So even if it falls 200 points from here, I still feel that there is a lot of strength in the PSU banks. This selling will fade out in couple of days or maybe weeks or a month, but PSU bank will start flying because I see the main strength in the SBI bank. Right now, it's just a small electoral bond which has come up as an issue which is going on. Once that will be sorted out and the SBI will come up with the clarity and everything, I think so it will fade out and PSU banks will fly up. And if I see in private banks, I feel that people should give lots more importance at this level to HDFC Bank. Because even at this fall, HDFC Bank is not giving us a breakdown below. It's a low that has made of 1365. So one should look out of the stock if it gives a breakout above 1481. Currently it is 1430. So it should give us good closing above 1480, 1490 on the daily basis. And one should definitely add up the stock in their portfolio, because when I see their net income on the TTM basis, that is to last 12-month trailing basis, I see they are gradually improving their net income. It's going up non-stop. So I feel that this selling what had happened from the top will fade out, because you still getting this stock in 19p, which is not a bad at all. A stock which is giving you consistent net income growing, and it's still available at 19p. It has to be undervalued according to me.
Right, Yogesh. And Yogesh, before coming to gold and silver, I would like to know about the chemical names because although the results have been not so good across the sector, but people believe that the recovery is 1 or 2 quarters away. So broadly, do you see any accumulation or those kind of signs happening in the chemical sector broadly, and what does the relative strength for the sector as a whole says?
Okay, I just let me see the chemical sector as a chart. So if I see the chemical sector as on today, it had given a breakout, and due to this fall, it has good selling off on the daily basis. But if I see on week basis, I feel chemical sector, yes, it will give a turnaround, even which I feel. So if Nifty reverses from here, I feel yes, it has a lot of potential to give you good returns from here. And if we go for a particular stock uh, in the segment, uh, then the stocks can be, I can just give you one or two names. Gulf Oil Lubricants is one of the stocks that can give a good strong rally from here. And There is SRF, which is at a good consolidation area of around 2,460. So if it doesn't break around 2,200, then it can be a good potential uh, strong company from here. Then the other which I can see is they're all very small companies which are showing as of now strength because of this selling pressure. There is a lot of selling, but one should give a watch for the Goa Carbon. The Goa Carbon gave a good breakout at 660 levels and went till around 930 levels. It has come back to the support, and if I see the fundamentals, it is available at the 6 PE, and the net income has been growing uh, at every significant results, and I feel it's undervalued stock. So one should give a small try to buy at 690 and give a stop loss of around 570 something, and just try it out, because relative strength on the Goa Carbon stock is showing very a lot of strength in it, in the chemical area.
Right, Yogesh. And you talked about the defense and railway theme. So basically, I do not see there would be specific index for that. But broadly, like those names had given tremendous returns, and after that, this correction, they have also seen reasonable or say more than reasonable correction as well. So basis relative strength, what's your view around that? Because many people, I believe, in the last leg of the run
Hmm,
had
hmm, hmm.
entered in those names, and they are obviously clueless what they shall be doing with their investment. So broadly, what does the chart says for those names? And then for our audience, guys, we are discussing name, but that by no means is any buy, sell, or hold recommendation. This is purely individual views, and you can totally take that with a pinch of salt. Yeah, Yogesh.
Yeah, so if we see the railway sector as a whole, it still holds a lot of strength as on today. So one need not to be worried about this company. It's just that whenever they are entering into railway sector, so if I see the entire sector relative strength is still very bullish. Um, Even if a little bit more fall over here, I don't think so. The relative strength is going to shift drastically to the negative. I feel that if there is a possibility of fall of around say more 4 to 5% in that sector, but in a broader scale, I still see a lot of potentiality if this government comes back, which we all feel will do. So I don't think so that we need to worry about this thing, because the orders are very much in line, and but one has to see the fundamental thing. I see a lot of stocks in this segment has uh, been overvalued. See, so the if I see the BEML is currently very overvalued with the PE of 64, which has just shot up overnight. Then I see another stock like Indian Railway Tourism, that is IRCTC. That is right now a bit of undervalued, because the net income right now is showing really great, but the PE is high at 64, because a lot of people are demanding such kind of railway stocks, so they expecting a lot of returns. Then IRFC is overvalued as on today. Uh, Texmax is the stock which is undervalued and showing a lot of net income. What we say, returns on their business. So that I feel that Texmaco Rail at 150 levels to 145 levels can be a good accumulation area. Aircon right now is at the 17 P. Then one can see this stock also for them to accumulate at around 200 levels. A lot of people have RVNL in their portfolio, I'm very sure. But RVNL, what is happening? They are not able to convert it into net income. For before 4 quarters and all, their net income was 3,812 million, and right now it is after 4 quarters, 5 quarters, still 3,586 million. So they are not able to capture the all the orders, because what happens is the money comes very late from the government, and the PE has shot up from 5 to 26 in just 5 quarters. So RVNL, I would not advise people to add as on today. Try to avoid RVNL. And Titagarh Railway Wagons is a very good company. From 482 million, they are able to convert it to 748 million in net income in just 5 quarters. P has been a little bit short up, but it's still undervalued at this rate. So if any given point of time they feel that they need to average in railway stocks, then these are the three stocks they can look for. That is Titagar. The other what I said was Ericon, and other was Texmaco Rail. That's the railway sector, and I feel that the railway sector still has a lot of game in it.
Thanks, Yogesh. I think more or less we had a view on the market as well as the sectors across the market. So definitely helpful, and we'll talk more in future as and when situation demands. So thank you so
Correct.
much for taking out time and discussing. So thank you so much.
Thank
And
you so
for our
much for having me.
yeah, and for our audience who joined late, they can listen to the recording and definitely they can subscribe to the YouTube channel Accidental Investor Prince for all these sessions are uploaded after this. We record the session and those sessions are recorded so that you guys can listen those conversation at later point in time. Thank you so much. Good night. Take care.
Thank you so much.